Sweet. So this is Wednesday. It's the 21st of January 2026, and it's a post-trade session evaluation for a trade position that I've just come out on. And we're going to have a little bit of structure to this because I have a few things to go over. We've got the trade taken that I've actually taken, which resulted in a minus 128 pip loss. I've got a 5 point checklist. So I used to have a 4 point checklist. Now we're adding a fifth point, which only is in select scenarios, which is something that I will have to go over in a little bit of detail. And then the latest opportunity that I had and how it hit full TP or rejected just before full TP. And we'll go over all of these things. So first things first, I would like to go over the first trade position that I took. We've only taken one trade position, and it's based off of the massive liquidity grab. So to give context, today's the 21st. We've had the Davos meet with Donald Trump with his speech, and during the speech, we had a massive drop of price action to liquidate a specific area. And I knew that this is a potential area that price action will continue to reject at. So therefore, I decided to get into potential buying opportunity. Now, at the time, I was thinking, is there a likely chance price action might come down to retest the lows? And I said, there's probably not going to be a very high likely chance. If we look at price action, I waited for the candle closure of the 1 minute. The 1 minute gave you the closure above, so we've identified the current range that we're in. I was looking to replicate price to the left of my screen based off prior price action before in the past, and it's pretty obvious to me that price action will most likely just continue to range in this area. So yes, the bias, the narrative was right. We've ticked off the current range, we've ticked off the liquidity areas, we're ticking off mirror, and we're taking off narrative because the 4 hour and the 1 hour time frame already showed us indication that price action will continue to shoot up, and the 4 hour and hour also had that rebreak at the current lows. So for me, what I was looking for was the buys up on rebreak at the highs because you're utilizing bullish momentum. In this trade position, there was indication that price action could potentially start printing U bearish structure. So when we got into the trade position, we already understood, okay, this isn't really exactly what we wanted, but we're utilizing higher time frames such as the 5 and the 15-minute time frame at this time. 30-minute time frame, even when I went into this trade, I did tell myself it's not looking massively likely that price action will continue to drive up because the current candle that we entered was this one, was here at 2 p.m. So the current candle already had, if you can see here, barely a top wick on the previous candle, barely a top wick on this current candle. So yes, although we were trying to play that flip bullish, you don't necessarily need it because you've already had key indication that price action is indicating no further range to the upside. So there's where I kind of went wrong already. Again, I'm not just solely basing it off of the 30 because the current 15 also made quite a lot of sense. We were entering on this current candle or we're looking at this current candle. The 5 minute time frame had printed you like this, so you swipe the lows in the liquidity area that I was expecting. So naturally, the next five open, I'm expecting to hit your TP target at 870. Now, this isn't my full TP. My full TP was actually initially right above, so my risk to reward was a little bit better. It was more attractive to me, and getting into a position, I expected targets to be at this area because you've grabbed liquidity in the same place. So everything pretty much made quite a bit of sense to me. There was still some questions of, yeah, maybe I should either manage the position on the top wick first, but you came so close to my advantage point, I said, let's leave it. If we look towards the trade outcome update, so we came out with a full SL that is minus 128, and to make the sting even worse, we went in at a 0.05 lot size, which is completely like different to what we normally do, which is a zero point 0.1, zero point 0.01, or a zero point 0.03. And that's just to get myself in the shoes of actually doing a proper funding challenge, which again, I credit myself to. Perhaps the trade idea wasn't necessarily the best, but again, it's pushed me outside of my comfort zone and resulted in me figuring out these breaker highs and lows to add into specific situations. So going over the trade outcome update, you can see that price action has swiped lows again. Now, this is the key question that I need to observe over and find a more clear reason as to why price action is doing this, because then this will help me in the future understanding when and when not to use my fifth point of my checklist. So as you can see here, price actions grabbed that wick, price pushed up, you've rejected at this area, price has come back down. You've showed me indication that price action is trading back within the range. You've given the retest. This right here with the fake out, you close bearish with no bottom wick. You're looking at the next open as your point of entry, and that also happened to be a 5 minute candle open. So as a 5 minute candle open, you're automatically looking at taking a buy here. Why? Because your advantage point is going to be the wick fill of the previous candle. Therefore, your advantage point is set here. Price action has your full TP, and this would be a textbook trade play. Now, thing is with these trade positions is it doesn't fully push up to the 48.70 areas, which is what really confuses me in these scenarios. Because if you look at prior price action, sure, if I was to look at models, this would be the most recent high. So I'd be targeting here, we'd be full TP out at this area before price action rejects. But now, this is where I come on to my latest opportunity, which is this right here. Price action cleared all of my checklists. So you had the hour candles. The hour candle opened up clean bottom wick first. 30-minute candle gave you indication of the previous candle body of the wick closing closing above the previous low of the previous candle wick. That is a massive tongue twister. So price action starts pushing up. You're expecting price to fill out the entire range towards 6.9. So why does price action reject at this area 9 pips away from my full take profit? It doesn't make too much sense to me of what price action would like to do. You swipe these highs before you're expected price to reject at this specific area. Why is price falling short by a couple of pips? What does this mean for my take profit? How can I make sure that logical price levels should be respected? How do I know, do I have to shorten it or do I shorten it every single time? How do I make sure I have a TP in a logical position? Because for me, when I'm looking at ranges, I think this is a perfect execution. I think that the level is perfect. I think if we look on the hour, the range makes sense. We look on the 30, the range makes sense. We look on the 15, the range makes sense. You get wick taps in this area. So for me, TP placement still needs to be worked on just a touch. I think next time when we're always into a position, we want to be a little bit more conservative on my full take profits. We're going to dial this down a little bit so we can always guarantee the higher probability of price action actually ticking you out on your full TP to secure that profit. Other than that, it's an absolutely phenomenal trading day. We've got the 4-point checklist updated to 5 points. We've got the current range that we always know what to do. We've got the liquidity areas, which we actually followed today. We've got the mirror on price action. Although we're at all-time high levels, we do have a small amount of mirror price action of historical data to actually copy. And we've got price narrative that we're looking to utilize to my advantage. Had today gone the way I expected when I had the rebreak of the lows, we would have actually had an absolute amazing dub. At least a break even minimum, because price action wouldn't have actually wicked you out, right? Now, the new thing, which is the break of the highs and lows, and I say in specific situations, and I'm still trying to figure this out, is because in certain situations like this, when candles need the retest, is when you'll have the verification. However, like for example, this current hour candle has already given you indication of the 30-minute pulling you back. You want just the 1 hour bottom wick to give you a partial wick fill before price action starts pushing up. It makes sense to take that trade position. So like I said, in my mind, I know what the narrative is. I know what needs to be done in order for what requires a 5 point and what doesn't require a 5 point, but I want a little bit more clarity in order to write it down. So when I just have a systemized approach based off of a checklist, I know exactly a very clear approach, what must have that 5 point and what doesn't necessarily need a 5 point. And that's what we're gonna work on for the next time. So it's a good day. Although we ended with a minus 128, it's still an absolutely fantastic learning session, and I actually feel like I've gained more value out of this in the past months combined.